towards our theme-based panel discussion, navigating tight copper markets, what industry should do differently in 2016. So here I would first of all like the uh, intercommunication with the panelists with what all presentations they have done. First, what is a common thing what you feel you need in one sentence to address the industry? What are the precautions they have to take, and what are the moves they should make with all the background with all the panelists have given? So, can I put this first question to Mr. Kothari himself since he's already on the screen?
Uh, yeah, thank you very much. First of all, I would say please play safely. As Dhaval said, always do hedging because now the margin is very thin margin, and if you don't go for hedging, you have to suffer. As Hemant also said in his interview, that hedging is very important in these days. And as I said, margin is very less, so you have to be very careful in that.
Okay, I would,
Yeah,
Mr. Chandrasekhar ji,
yeah,
would you like to add anything?
yeah. I completely agree with Sushil Bhai. Hedging is extremely important, but not hedging of just the commodity, but also forex. I expect huge amount of volatility in
Yeah.
the forex market in rupee. I think so. Hedging or risk management is principally should be the theme. I want to make two observations. One is, given the price difference between copper and aluminium, increasingly there is a trend to replace copper with aluminium for lightweighting for vehicles, for example. But it's too initial, a very initial stage, but this can pick up if copper prices were to run away. I think the propensity to replace copper with aluminum in certain applications where aluminum is good enough, that can pick up pace is just one observation I want to make. Second, I think Drishya probably talked about price outlook given by various institutions. My own price outlook, as I said earlier, this quarter, I won't be surprised if there is a correction in price from the current level, 12,800 or whatever that per ton. That's the correct $12,800 a ton on the LME. I think that's the kind, but there could be a small correction. But going to the second half of the year, last quarter, my sense is copper prices on the LME will be upwards of $13,500 a ton. This is my view. I just wanted to share this. Yep.
That's interesting. Can I have one recommendation from Mr. Cabra? Mr. Cabra?
Yeah, I think just keep your supply chain a little more flexible. Make sure that you all make best use of the duties benefit, but don't overdo it. That's my only thing. I think just keep it simple, keep it balanced. Yeah.
Mr. Dhaval, your
No, one sec. No, I want to check with Hemant. Would you recommend a just-in-time kind of order placement, or should companies, corporates do stockpiling and inventory building?
I think for us, India, inventory interest cost is very, very important,
Yes,
right?
very
So you
true.
can't do stockpiling. Okay, that's very
Right.
clear. Interest rate will sweep you.
True.
So you take it as and when you take it. That's it.
Right. Okay. So, okay. All right. Understood. Makes sense. Yeah.
Mr. Dhaval, can I have your view on this?
Well, there are two pertinent points that I'd like to make. Of course, hedging is important, but given the complexity of the situation, it's not a very simple mechanism anymore. I think if you look at the spreads of, that have kind of, the swings that have happened over the last 6 months, I think it's mind-boggling. Like, when you see copper going in terms of backwardation as high as 150 and $200, getting back to a contango market, again back to backwardation. So from a consumer perspective, while I like the concept of hedging, but again, that comes at its own risk, and plus the margin requirements, so on and so forth. I don't mean to say that you need to sort of expose yourself to the market variations, but yeah, I mean, in an industry where I represent more on the secondary side, where we talk about copper alloys like brass, hedging comes, it's a very complex procedure, because how much ever you try to sort of sink it it just doesn't happen. It still leaves you open, exposed to about, say, a 15, 20%, 25% exposure. So that's on the hedging part. But more importantly, I think one very, very fundamental thing that I strongly believe in is raw material security. And I think that's resonated a lot across every presentation, everybody who talked about it. And I think India's copper story become successful once there is raw material security in place. And I think at government level, at industry levels, whatever that we can do, I think we just need to make sure that we have adequate supplies of that. Of course, everybody agrees that there is no dearth of demand. The next 5 years, 7 years will be transformational in terms of applications and the demand per se. But I think the question that we need to ask is, where is the raw material going to come from? And I think if you've answered that, you won it.
Now, one more.
Right.
What India needs to do in terms of securing scrap supplies? When you said this, it
To be
comes,
honest,
there has to be
Binani,
solution.
I would say that it's a simple question, but not a very simple answer. You see, I think
Okay.
we're too late in the game. Unlike the Chinese over the last 15, 20 years, they've kind of, integrated. So they understood that what resources mean. And it's not only their own ecosystem. They've gone out, they've invested in mines, in smelter capacities. So they've really built a solid asset class across the globe as far as, and including copper. I think in India, we were too late to catch on that. And now I think there's this jostle and the squeeze that's happening. So I think the answer to that is that, yes, we need perhaps scrap supplies would perhaps be the answer in terms of, making sure that we have adequate supplies at the smelter level. But I don't think we need to now start be more dependent externally. I think the answers are internal. And as I said, that this low consumption base at some point it will mature. That over the 5, 7 years, the electronic goods, the white goods, the cars, everything when it comes up for shredding or end of life, we just need to make sure that we are efficient in terms of our recovery processes, making sure that every ounce, every gram of copper is extracted in the best possible way, and we don't run a parallel system. I think at the moment, the big players are haunted or sort of, I would say, disturbed by a informal economy that takes place, and there are reasons for that. I think the government really needs to deep dive, look very, in depth how we can plug that. So at least whatever this informal flow is, that at some point in time converges with the the formal economy of copper.
Thank you. My
Absolutely.
next question I would like to put to Drisha is price volatility becoming structural, and how should industry participants prepare for that? Though we have spoken about hedging, but even then, this answer needs to be considered. The volatility
Okay,
becoming so structural.
yeah, yeah. So, ma'am, in 2025, like how we saw in the last quarter, how prices became very volatile. So, in
Mhm.
2026 also, copper prices are still swinging up and down, and that is not just because of the normal market ups and downs, but because of the long-term reasons. So, demand keeps growing quickly, especially from the things like EVs and renewable energy, while supply is slow, like how we discussed in the PPTs, and supply is obviously hard to increase. So, since inventories are low globally and most supply comes from just a few sources currently, so even small problems or any financial moves by government will make prices jump or drop suddenly. So this means companies can't just react to price changes in the moment. They need to plan ahead. They should buy copper in batches or maybe as like we just discussed smart hedging procedures and get it from multiple suppliers including scrap and make sure that their contracts allow them to pass price changes on. So they protect their profits and keep their operations running smoothly.
That's a good tip, in fact. And now I think another question I'll put up to Mr. Shetty Questro from Questro. Based on what we have discussed today, how confident are you about the durability of copper demand in 2026? With confidence, how much we can say? What's the supply
Yeah,
factor
I'm very
coming in?
confident about the durability of the copper demand in 2026
Mm,
months.
absolutely.
Because, and the reason is demand is structural rather than the cyclical, actually. So
Okay.
if we see the copper demand is driven by the long-term themes like electrification, energy transitions, EV adoptions, green constructions, and all. And these are all policy backed. It's not like a general industry, and it's a capital intensive and multi-year in nature. And the other perspective to see is India's per capita consumption of copper is just at zero point 0.6 to zero point 0.8 max to max, and whereas the global average is at 3.2, 3.5, and whereas the developed countries at 13, like Germany is at 13 kg, the copper consumption. So from my perspective, copper demand growth in 2026 is not just visible; it's structurally durable. This is what I can tell.
That's good. So we are not wrong in saying that copper is coming as in comparison to gold. Will go may cross also at time to come.
That's
Okay,
true.
now Mr. Chandrasekhar ji, one thing which I missed on asking you, we would particularly value your view on demand visibility and the macro signals industry should track into 2026. After all, demand and supply, what we are talking, and resources. So, what are the macro signals of the industry which we should track, which can help the copper business?
Oh, there are multiple macro signals that we need to track. One is what is the mood of Mr. Trump? Is he going to impose tariffs on refined copper in the US? So that is one single factor which is currently driving and creating a price differential between the US and other than US markets. This is number one. And of course, geopolitical development that can potentially disrupt supply chains. Otherwise, in my mind, and as I said earlier, demand side structurally strong, will continue to grow whether we like it or not. Things will continue to grow. Supply is the issue in commodity markets, which
So
I've
we
seen.
have
I've been tracking. Demand is usually demand grows very steadily more often than not. The price volatility is actually created by supply and supply disruptions. If you are in a state of huge surplus in supplies, obviously it will have an impact on prices. If you're in a state of deficit, again, it will have an impact on prices. And the third one is more tricky. If the supply and demand are fairly well balanced, that's an extremely tricky market because even a small change in either demand or supply will have a disproportionately larger impact on prices. So to predict prices in a well balanced market is extremely risky. But we are not in that situation. We are in a situation where demand is rising and supply is certainly trailing demand growth, and then therefore prices are expected to rise. Within this, tariffs, geopolitics, monetary policy, economic growth, all these factors can actually play a role. Yes. Yeah.
So Trump's blessings will continue. I look the way every time we have to bank on what is his role. So he is blessing us, or let's say the other way. So let's take it as his blessing
Yeah.
only.
Yeah.
So next question I'll put on to Mr. Sushil Kothari sahab. What role should institutions and trade bodies and policymakers play in improving the market efficiency? As Bombay Metal Exchange, now that you're president, what is the role of these associations? How they can help the members in coping up with the tightening of prices and to make their way to get the business floating. Mr. Kothari, is he there or he's signed off? I think he must have signed off. Maybe.
I think
Okay.
it's
But
exited.
if
Yeah.
anybody else can take up this question, Mr. Dhawal, since you are also into one of the associations, so what is the role of the associations in helping their members in coping up this situations?
No, I think you see, from policy perspective, I think the government is in sync with this basic ideology or the basic thought that copper as a commodity and India should do more and more in terms of ensuring that it is self dependent in
Reliable.
terms of its supply needs. The only issue is that with all the right intention and the heart in the right place, I think over the last 2 3 years, government has come up with several policies. Now they are coming up with a critical mineral policy where they have given some incentives in terms of PLIs and stuff like that for critical material recovery. But again, what happens here is that when you create a policy, and I'm going to talk about two important policies here. One is the vehicle scrappage policy. I think the idea at that point was that, of course, to give a kind of a boost to the automotive industry, but more importantly, to make sure that the vehicles are recycled properly and there is enough feed available for the non-ferrous industry, secondary industry, and for the steel industry. But after as in this last 2 years, if you see, the net result of this is that all the investment has gone in from the industry, but there is still a big lag in terms of getting to the results that were thought of. And the reason being that in terms of implementation, somewhere we fell apart. There's not enough material available. And there is a reason for that, and the government knows about it. So you need to plug that. Likewise, EPRs, I think we've gone on an overdrive, perhaps we're the only country where I think we've successfully implemented the EPR models. Now, again, at the first sight of it, it looks very interesting that this should push recycling rates in India. This should give, it should create a very harmonized relationship between the brand owners, producers, and the recyclers. But again, 1 year into it, you see that the matter has become sub judice in certain material streams. The question of, viability comes in, so on and so forth. So again, from a institution perspective or an association perspective, we are here to sort of brainstorm. We are here to come up with ideas, look at the best possible examples in the world. But I think where India really needs to look into it is in terms of implementation, because I think when you come up with great ideas but at the execution level, if you fall apart, I mean, this whole idea gets wasted. So likewise, I mentioned about GST as well, that today we all understand that why there is not enough domestic sourcing that's happening, and there is a reason for that. I think it's in front of us. But I think, collectively, because it's just not Ministry of Mines, there's finance involved, there's commerce involved, there are a whole lot of it's a huge machinery at play. So I think at some point they all need to get into it together, huddle up and say that, yes, this is what we want. So again, from my side, or from an association side, we will keep pushing for newer reforms and newer ideas in terms of ensuring that there is enough material in this country or raw materials in this country. But by end of the day, the government also will have to play a very strong, active role.
Mr.
Let
Kabra,
me,
I would like your
Meena,
views now.
let me one second.
Punch.
Let me just add on to what Dhaval said.
Please continue. Yes,
Completely
certainly.
agree with him on what he said. After all, I've been working with the government, not for the government, but with the government for decades, and there I know how it works. Particularly from the food and agri sectors, we know most ministries work in silos, unfortunately, and this is a big challenge for many of the sectors. I'm sure metals is also a casualty of the silo approach. I think it devolves on, in my view, on the trade and industry associations to lobby, have an interministerial coordination committee or whatever. Maybe something is available. I don't know about the metal sector, but for food and inflation, there is an interministerial coordination committee available. I think we need to work towards it, engage with the policymakers. After all, their intentions are good, but somewhere down the line, the implementation takes a beating, and the thought process of the top policymakers does not percolate down to the lower levels. That's a big challenge in our country. But this is the environment in which we have to work. This is a legacy which we have got over the last several decades. But somewhere the associations have to break out of this mold and lobby the government, put some. I mean, brainwash them, talk to them, lobby them. What else would I say? I think that's the only way forward.
Chandrasekhar, I'm holding a glass in my hand
I can
and I'm
imagine.
saying
Yeah.
glass is always
I,
half full.
yeah, right, correct. Yeah. Right, perfect. I mean, I've seen it all, I've done it all. So, but anyway, okay. That's why I think, thank God I'm not in any business. I'm only a communicator. So, I'm fine. Yeah.
I
Okay,
share
all
with
right,
you your
next,
views there.
next.
My last
Yeah.
question can come to Mr. Kabra. What are you expecting from, I mean, say, you could be a wish list in the upcoming budget. That is one part we can think of it because it is just when you first 1st of February. So we won't be meeting before that. So anything you have specifically what you expect in the budget this year, which will help the industry? Mr. Cabra is in? Or else I think he was also in a hurry. Okay, we leave it to the audience. If an audience anybody has any questions, we had some questions which I have shared with the auditor panelists, and most of the queries what you wanted have been covered in the presentations. So I think we can conclude today's discussion highlighting three clear takeaways. India's copper demand outlook remains strong and policy-led. Supply constraints, particularly in refined copper and scrap and structure, not cyclical. And in a volatile environment, transparency and market efficiency will be critical for industry decision making. On behalf of Metal Trends and Big Mint, I thank all the speakers and participants for their insight engagement. We look forward to continuing the industry dialogue every month. Thank you for joining us.
Ma'am, I would like to
Okay.
add one more thing.
Yeah.
Yeah.
Just to keep everyone informed, so Big Mint is coming with a India Non-Ferrous Week 2026 conference, which will be held in Mumbai in June. And over the conference will be of 2 days. And in that two focus days, the forum will bring together the entire non-ferrous value chain. There will be producers, recyclers, traders, policymakers, technology providers, and end user industries to discuss all the base metals and including tin and are shaping India's industrial growth and changing global trade flows and pricing dynamics. So this is the first non-ferrous conference from Big Mint side. We will look forward to welcoming you all in the event.
Yes, surely it will be part of our. By that time, we have covered all the base metals for your series, and we will make it a complete package in that. Thank you. Thank you, Simran. Let's meet again next month with aluminium on the board.
Sure.
Thank you so much, all of you.
Thank you, ma'am.
Yeah.